It's Crypto Sniper. How are you? Quick take up from where we've been on Bitcoin. We're going to update you on Bitcoin. We're going to update, many people have been asking on our XRP. We are the originators of the big $16, $17 calls from so many moons ago. But many copiers are now starting to repeat our call and trade now and repost it literally every day and make it as if that's their own. But we will update on the XRP. We will also update on chillers for you on the possible opportunity there. So what's Bitcoin doing? So overall, this is looking really good. I'm going to drop it onto a lower time frame. We did the smaller draw for you. We were indicating that you're going to run this level. But what's also transpired is a new reversal pattern with a new neckline. Here it is, left shoulder over there. And then a long period of gestation below the neckline. We call that armpit 1. You can nail it, boom, bosh, bosh. Down she spills. Then we got our upside head and shoulder over here that then blasted up. Armpit 2 at the 42,000 is our chosen neckline, just below this key level of significance at, you guessed it, 42.5. Fancy that. Remember that. So there's your right shoulder over here, head all the way over there. This gives you a target of in and around approaching 46k, 45,756. So after running the 42.5, you can see you actually pushed up and then you came back down for a little dip. Of course, you were at the 42.5. We all know what happened at the 42.5. In fact, we've got it all drawn for you here. Let's wipe our face and drop down the time frame. Want to just highlight here how you got a squeezy Japanesey there, right there, bang, on the 40k. And that then led to the sell-off that then made its target, and was the revisit to the basing ascending grind line of a much longer broadening structure that we covered in previous videos. So you got a little bit of a bounce there before breaking it. Then you wound up on the 40k in a similar way, back up to the bagel, slowed down a little bit, got to the 42, rested, and then you had a shooting star reaction initially to the 42.5, which is that legacy neckline all the way back to the 69k high. That's right, that gave you your 16 grand low of the bear market. So now you're pressing up a little bit. You've got to clear the funnel here, which is a zone, and once that's been done, you're very much in the bullish zone, but it looks like it's taking place. This is a triggering event when you took out that high, and of course the passing of the neckline that we identified, and as I say, it suggests that range for target. So that'll make a nice secondary high as a bit of a squaring up out of that bigger broadening structure on the bigger time frame. What does that squaring up out of a bigger broadening structure on that time frame actually mean? Reminder on the 10-day that you started to go into a broadening after going up impulsively. Let's just pull it all through for you. Let's maybe make those annotations intensity go away for a while. This has all become a broadening structure after the very strong up. There it goes, capturing the lows. You can see the break, kind of like that. So what that means is a little bit more pushback, a struggling grinding climb that you then got the sell-off for that's now in. So essentially we are just in this reversal here, and we're saying you should get back up to in and around here. So that'll square off that pink broadening structure, having broken it, respected it. So let's change color actually. Let's do it like this. So what could be a possible scenario, it doesn't mean it is going to be the scenario, but that was your high around about the 49. After running our 47.5, you make a secondary high here, you come off a little bit. There's still a bit of Bitcoin fatigue, don't forget, on terms of the ETF. That comes off a little bit, and then we could squeeze again, go a bit dull and quiet, and then we go up. What else outside the crypto market is being a bit supportive? Well, we talk a lot about metals. And let's just switch that out. That's a busy Picasso. And you've been in a channel range here on the gold silver ratio. So this is going to be the collapse out of this channel range, which has been in place for an extended period. So as we had silver being really dull and actually slipping off a little bit, and gold kind of just winding up, you had a pop out of the gold silver ratio. That's bad for gold and silver, particularly silver. And when you get that rejection that you got here in the orange, the shooting star, it's likely to imply actually you're going to go down, which is actually good for the anti-fiat. That is both gold, silver, and of course it takes you into the cryptos as being positive as well. So remember, I use gold and silver even more than other people that talk equity markets, because these are the deemed capital preservation money alternatives to the fiat debt-based system, which is in a state of failure. Fiat debt-based system in a failure. So that is dollar and bond market tied together, state of failure. Alternative to that is not actually equities. You can't take your share certificates and buy yourself a bottle of water, milk, or whatever. But you can potentially purchase with Bitcoin, crypto, and gold and silver. That's old world money systems. So the real old money alternatives are the most indicative of what's probably going to happen, and the loss of confidence in debt markets. In spite of the fact that rates are supposed to go down, the reason they won't be able to go down too far is who's going to buy up the valuation going up in the debt market. There's no keen money to throw good money after bad, and that is why this is actually a supportive rejection here after going against the direction we wanted it to go up top here in its staircase move. So this could also be good news for the precious metals guy. Remember, they're not your enemy if you're in crypto only. What is anti-fiat system, what is good for anti-fiat system will be across a category good. So there's that. What else did we decide to talk to you about? We're giving you a heads up again on XRP. So people get very, very docile. So you know about the structure earlier. This was rightly pointed out by a few people, and I've certainly accepted that you wouldn't in the modern day time get such a skittish dip out. We warned about a possible flush out. I don't think if there was a flush out, you would get anywhere near that same level of scale. On account of that. So just to be absolutely clear on that, over there, this was almost a bad wick. It could have been a bit stamp anomaly, or it could be a lot of things, or it could be legit, but it was very thin markets, and the people weren't watching it. In actual fact, I see this little hammer here. I'm seeing this tiny fractal, and as I will have notified already my premium community, which you're hearing later, because this is something you're on preview. I think that you're going to go up for a possible little 3 and wind up, and that could be the beginning of a move up. However, before, on the smaller one that we did trade successfully that had a legal reveal, you didn't get much of a third, you just went. So I don't want to be late, so I'll take the relative low 2 on this little fractal, which could be the break and entry onto the far larger structure, which we've given the $17 targets for, the $16 through to $17 targets for, subject to the final settlement of our third impulse there in terms of HVF method. Okay, so XRP, a little bit of a warning, and people are such fatigue in XRP. They're like, oh, our coin is doing one of the worst. It's shedding, value. If you look at XRP DOM, it's just been a bad news story. Let's have a look at it quickly. XRP dominance, which will show its relative underperformance recently. It's just peak fatigue. The difference is people were very galvanized in when there was the lawsuit. The lawsuit kind of got everyone, damn, this is an injustice. They've now just suffering from fatigue. This has just been down, down, down. It didn't have a bull market. It never got its real spike. You got a bit of a channel here, and it's down, and everybody's like in the dumps here. Now, the difference is that could be a lengthy RL2 bottoming type thing. Now, of course, this dominance didn't go higher here, so you've not got a current HVF structure. We've drawn other things for this on a lower time frame, but I think you're near the low end of the range of the loss in dominance for the XRP. And yeah, I think there's some better news on the way generally, but the structures we did draw haven't held, and this has led to peak fatigue. So when you pushed out over here, it looked like you might be going. That was our initial little squirt, and then it's just been nothing but a fizzle. This is a spike and fizzle token. So those structures in terms of the HVF are not happening yet. We still have this W bottom, but boy, is it taking a while for it to come around. So I would argue at the moment there's peak fatigue in XRP. Peak fatigue in XRP at the moment. That doesn't mean anything's going to happen the next day, but you want to start thinking about this and being in position well before. So that's something just to bear in mind. And then we also had chillers that we spoke to you about. Now listen, I don't make fundamental cases for tokens. This is entirely agnostic and technical. A lot of guys going shitcoin, high inflation rate, whatever the case may be. Good luck. Don't trade it then. Watch the channel, say it's not something I will do. It's fine. That doesn't mean there aren't other people that aren't interested in making some money on anything that goes up. We're not marrying these things. We're riding them. We're humping them and getting out. And if they think they're going to go up and they're going to take it, we have a take profit and we get out. It's not a commitment of love and absolute belief in it because it actually traded. So this is having a little bit of a pullback. You might get a wind up entry here for some people, and for those that never got in, you could potentially do, it's higher risk, but you could do an RL2 entry on buy on a little bit of an easing here, and you might end up with another structure. But it's quite early, you're taking a lot of extra risk. Everything I say, by the way, is non-advisory. You know, we get guys sometimes that come and do a call, they want to be part of the community and say, oh, you're going to tell me when to sell. We are going to inform you what we are doing on a non-advisory basis. The minute I ever say to you, even if I accidentally use the phrase, it is absolutely non-advisory. I never tell you should do this. You should do that right now with your money. I have no license for financial advice at all, and I don't intend to be an advisor. I am talking about HVF method, the things that are relevant of HVF method that are setting up for me and community members, and we are sharing all of that, and we are taking trades and owning our own outcomes. The advised implementation of the method is what you'll be shown, and I will be enacting that, and others in terms of the webinars and the support you'll be doing will be showing you their interesting takes and their enactment of HVF method on that. Whether you choose to buy and whether you choose to implement as taught is entirely up to you. So you will have enough rope to hang yourself. We can't save irresponsible people from being irresponsible. We're not going to tell you and take the responsibility of saying, hey, you should sell everything out now. I will say, I have reduced this and done that for these reasons. You will make your own decision about that. So it's very much a Gestalt principle. I don't tell you what to do. I share an experience of what in similar circumstances has occurred and what I did. And in this live market, that's what we do. So please understand that. Some people want to give up ownership of their responsibility and their growth curve and then have someone else to blame if it doesn't turn out exactly right. We will not be 100% accurate all the time. So that HVF structure, as we already covered in the previous videos, you will know where the targets is. As I say, developing nice tools for our community here, which we in test. But if I just go over there and draw that structure again, let's see, is it going to let me do it? Am I going to have to refresh? Refresh. Reload. It's going to put another token in there, I'm sure. There we go. CHZ USD. Thank you for all those late alerts. So it's on the Binance option that we're looking at it. Let's go back to the time frames we were on. It's such a hassle when you have to reload and it goes and resets everything. So let's just do that indicator together one more time. So this is something, as I say, that we're developing for our community, and it'll do the draws for you. But first you need to learn to draw them anyway. So the newbies will still do manual draws until you're past a certain period of seniority and you're in the community for a while. You see you made that second interim, absolutely classic of the chillers move, and you pull back. Where did you bounce? The first interim. Oh dear, coincidences all around. I'm sure everyone will say fluke all the way. So I think you could get a little bit of a hammer around here and you could get that winding up structure. That doesn't mean it can't spill back to our funnel area. So overall there's a bigger target up there, but potentially an entry there or anywhere along there in that range with a stop there is quite lowish risk. What would you do? Well, you would take the additional risk of a second HVF. So what you would do is you'd break an entry into a trade, which is typically how we caricaturize it. So let's split those two blue lines. This would be your risk reward in essence, and that stop would go just under there. And then you would play not for the new target that little structure is going, but that will be your break and entry into the bigger target. So what you need is both of these, this A to form the HVF, which still requires a rally over there, and then you would need the upside break through the third level, and then you would need it to continue on to the target. If it fizzled, even if it made its smaller target, let's say somewhere there, and then fizzled back down and came all the way back down, you could still go out, and then this could still go back up and make the target. So there is a situation where both setups could perform and you could lose your money. So we're working on the basis that once this wind up takes place, it has enough steam to finish all the way to target. However, if it just made its smaller target, let's say that's somewhere here, we can even draw it. Let's draw it. Well, we haven't really got the third impulse yet, so we won't be able to with the draw tool. So yeah, probably better I don't try to, because there's too much guesswork that has to go in there. But I would think that target's going to be around about there. It's pretty unlikely you run that target, don't run the other target, go all the way through there and then do that. So to have both win, but for you to be stopped out, is going to be a pretty exceptional case. But you've got to bear in mind, exceptional cases do happen, and there's no guarantees in price behavior, and there's volatility, there's lots of things, and it relies also on Bitcoin being relatively strong. We've just covered that, and our opinion is that it's going to be relatively strong and moving its way up to 46,000 range, where it might start getting a little bit choppy and a little bit of pushback. Don't forget, you made the 49, the 47.5, our key level is up there. So that's a little bit of an update on that one as well. What else did I have? I think that's it. That's just another Bitcoin chart. So if that's valuable, I hope it is. You know what to do. I'm not going to keep shouting like, subscribe, hit the first link below. That's assumed every time. Thank you for watching, and play safe out there, and we'll catch you next time. Bye for now.